2022 is coming to an end, and so we thought we'd take a look back on the year when it comes to your wallet. We're back with our friend and financial expert and analyst, Bruce Allen of Bruce G. Allen Investments. Bruce, good morning to you. Thanks for coming in. So back in 2022, we saw that sky-high inflation, the highest levels in decades that we've actually seen. How are inflation levels finishing out this year?
Yeah, inflation averaged about 8%, and we haven't seen those high inflation ratings since the early 1980s. What we've seen is that this year inflation peaked so far actually in June at 9.1%, and as of November it's still running around 7.1%. It's coming down, but we've got a ways to go before we get to the Federal Reserve's target of inflation, which is roughly 2% inflation. So there's a long way to go. Right,
and speaking of inflation, we know it certainly had an impact on interest rates this year as well. I think everybody remembers that. They might want to forget about it, but how much did rates really rise this year?
We've seen the most steep rise in short-term interest rates in the modern era. We came into the year with short-term rates at a little less than 1/4%, and now those short-term rates are now at 4.5%. So we've seen a very rapid rise in those rates.
And you're talking about these short-term rates. Curious how those impacted the long-term rates.
The long-term rates are what you and I feel in terms of when we are as investors and also as home buyers. The long-term rates, the 10-year Treasury bond, which is what many mortgages and other interest rates are set off of, they started the year at 1.5%, and as of yesterday, we were just below 3.7%. So significant rise, and that's meant that mortgages, which were at 3%, are now at 6%. So that's having an impact on the housing market.
Okay, so of course that impacts so many of us. Here is a question that a lot of people are asking. We know this is the big one. How did the stock market react to everything that happened throughout this year?
It's been a wild year for the stock market and mostly down. So what we saw was disparate proportional drops. The Dow Jones Industrial Average as of yesterday was down 6.2%. That index has large a lot of dividend paying value stocks. Those got hit less than some of the other stocks. You'll see that the S&P 500 was down over 17%. That's 500 stocks broadly based. The index that got really hit hard was the NASDAQ. Those big growth stocks are more sensitive to rates rising, and they're down 30%.
Yeah, look at that. Wow.
So I think the way that the market responded was a couple of things. One was the more sensitive stocks were to rising interest rates, the more they got hit. The less sensitive, the more they held their value. Number two was that some companies in certain industries really thrived. Energy, it was a great year to be in energy.
Yeah.
One of my friends noted that one of the best performing stocks was an energy company. Great year to look for oil and gas. One of the worst stocks was Match.com. Not such a good year to look for a mate.
It's never that great of a year either.
But we saw that, one is impact of interest rates, one is the impact of what's going on in the economy, and lastly is company-specific issues. But, one of the things as we go into, and we'll talk about this when we see each other next time in a couple of weeks, is what looks like 2023. Where are we headed? And we'll be talking about that.
Bruce Allen bringing everything this morning, including the tease to next time. Bruce, thank you so much for being with us. Good to see you as well. Let's get a check.